Our stock's about to break this nasty down candle we saw from 2 Fridays ago, because as we can see, the S&P 500 is in negative gamma and volatility could be about to spike. Now we come over and look at the fear and greed index. Right now we're sitting at 27, right within fear. Now if we go ahead and we expand the timeline, notice the majority of last week we spent down either in extreme fear or in fear territory. Then as we come over and look at the most recent investor sentiment survey, look once again, the bulls have dropped off. The new reading 33.7, prior reading 45.9, and then look at the bears. They jumped from 35.6 all the way up to 46.1. At a time we look at the S&P 500 and we're still contained within that nasty down candle. Now, are we about to break to the upside and make new all-time highs? Or is volatility going to come back and maybe, just maybe, we're going to come down to some of these key levels? Well, we still have a lot to worry about because let's not forget the government shut down. As the government's been shut down, we've seen the stock markets run the new all-time highs. However, the longer that this goes on, the more likely we're going to see the impacts on the economy and the overall stock market. If we come over and look at poly markets real quick and we look at see when will the government shut down in, I click right there and let's just scroll down real quick. In the betting markets, have the government not reopening until after November 16th. Let me know in the comment section down below, when do you guys think the US government will open back up? Now, as we come over and look for news catalysts for next week, basically Monday, no major economic news. Tuesday, no major economic news. Wednesday, no major economic news. Thursday, no major economic news. And then on Friday, we're going to be getting the CPI print coming out. Keep in mind, it was supposed to already have been out. And then at 9:45, we'll get the flash manufacturing, flash services PMI, and also new home sales. Now, something that we're lacking as we're trying to search for direction in the market, we still have not had any NFP job numbers, nor have we been able to see the weekly jobless claims. So maybe things are a little bit worse out there. Now, I talked about volatility potentially spiking up, causing the market to go lower. And as we come over and look at the volatility index, look at the VIX. On Friday, the VIX was substantially higher, where it topped out at about 29.02 before coming crashing down lower. Now, the VIX on Friday was down 17.91%. And the reason this is important is whenever the VIX closes greater than 10% up or down 10%, that has an adverse correlation with the stock market. Just like we saw on Thursday, when the VIX closed up more than 10%, it implied that Friday or Monday was going to be an up day in the market. Now, the fact that the VIX was able to close down more than 17%, it implies that either Monday or Tuesday, highly probable we are going to have a down day in the market. Now, when we come over and look at the options markets real quick, we can see right now the VIX is actually in positive gamma. And then as we come over and look at the GEX, let's go ahead and take a look at where are some of the key levels in the VIX as we look at the options market. We can see the high volume level is going to be 19. If we go below it, we could get a big move to the downside. But notice right up here where this red line is, this is actually going to be call resistance somewhere around 25. However, look right up here around 30. We also have a lot of gamma exposure up there around that 30 print, which could be problematic. But in the event the VIX does get down below 19, watch out, it's probably going down towards 18, which would actually favor the bulls in the stock market. Now, if we come over and take a look at crude oil real quick, crude oil this week came down once again. Now, crude oil was able to take out this first ABC pattern to the downside, but one of the areas we've been watching for quite some time, ABC pattern to the downside. We have the A to B leg, the B to C leg, which is a corrective leg, and we project down. Now, this could be more of a complex ABC pattern as we've had a lot of consolidation down through this area. Now, that larger ABC target comes in about around 54.83. Now, we come over and look at some of the options data, and we see right now, crude oil is actually a negative gamma. Then as we look at put support all the way down here, look at the gamma exposure right down here at the 55 print. Now, that's going to be very important. You can see it sticks out like a sore thumb. And if we look right over here, notice that ABC pattern completes just below that 55 price point. Now, the reason I keep talking about crude oil quite often is the fact that crude oil has been drifting lower. And with crude oil being so weak out there, that is a big heads up that the economies around the world are not doing as good as they would like us to believe. On Friday, before we woke up, we saw the markets put in the low, and look at the rally we had off the low. The Nasdaq on Friday had a 645 point range. As we come over and look at advancing issues versus declining, you would think it would be more overwhelming to the upside, but notice advancing versus declining issues on Friday, we had more issues declining than we had advancing. Then we come over and look at the sectors on Friday. Basic materials was a leader out there. But let's look at the 1 week performance real quick. We can see consumer services led the way, in the weakest sector out there for the entire week happened to be financials. And we know financials right now are a little bit stretched. For instance, take a look at the regional banking ETF. KRE on Friday was up 1.6%, but notice on Thursday, gap lower and continue to go lower. Now the MACD indicator on the KRE looks extremely weak. And then if we look at XLF real quick, we can see XLF looks kind of similar, but not nearly as weak as the KRE at this moment. Now, if we come over real quick, take a look at the Dow Jones versus the transportation index. Now, as we zoom this up, we can see the chart on the bottom is going to be the transportation index, and it has not been able to take out a prior swing point in quite some time. And notice the candle we have on the Dow this week, basically a spinning top candle, wick on the top. We have a wick on the bottom of that candle. That's really a sign of indecision, but quite often when you get an inside candle, the first way we break ends up being nothing more than a trap. And with an inside candle, highly probable the next week is going to have much more volatility out there. Now we take a look at the 10-year versus the 2-year. This is starting to creep up once again. This could be problematic out here in the future. Now, if we come over and take a look at HYG versus SPY, we see HYG recovered fairly well off of that low. After 2 Fridays ago, when we had that nasty down candle, HYG has been working on the way back up, but it's still a little bit too early to see. HYG has not been able to take out a swing point just yet. And for all intents and purposes, the SPY has done nothing more than sit here and chop around just a bit. Now, this week, we have a lot of earnings out there, and I'm going to have my eyes right here on Monday after the close, Zions Bank. That's one of the stocks that was causing KRE to have such a hard time. We also have Netflix out there, Capital One, IBM. We have Tesla. We have Intel. And we look at the big expected movers out there. WD-40 expected to move plus or minus 10%. Tesla just behind that, somewhere around 8.5% or so. So this could possibly be some catalyst out here for the markets this week, since the economic calendar is quite light on catalyst. I want to bring this stat to your guys' attention real quick. This is brought to us by Wayne over on Twitter. But he went ahead and pulled this back, going back the last 51 years. And it's basically, let's look at the trailing quarter and what the percent was. If we were down 3% the trailing quarter, then you can see we had a favorable period of time coming up between October 18th, October 27th. Now, this is going to be very important. You want to pay attention to this stat because it's going to tie in to potentially seeing the VIX go up towards some of these higher areas as the option market is predicting. So then when the trailing quarter has been either down 3.3 to positive 3.3, we've been up 7 times, down 10. However, our trailing quarter was up 5.83%, which will put us in this third quadrant where it's up more than 3.3%. And notice we've only been up 3 times, down 14. That's roughly a 78% chance that between October 18th and October 27th, we are going to see lower prices in the stock market. My Fun and Futures just announced you can now add the Flex add-on to the core plan, which is the most affordable account. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, as we come over and look at the SPY real quick, notice this week we had an inside candle, wick on the top, wick on the bottom. So neither the buyer or seller could take control of this week's candle. Then we look down here at the MACD indicator. It looks like it's about to cross and potentially roll over. Now, could we potentially get a pullback that could take the market all the way down to 608 or potentially even lower? Well, if we grab our Fibonacci retracement, measure from the swing low all the way up here to all-time highs, and notice that 38% retracement is just below that prior all-time high that the market was able to break out from and still has not come back and essentially retested that price point yet. Now, as we come over and look at the daily chart real quick, 2 Fridays ago, we had that nasty down candle. The market has rallied up, but basically the market has been doing nothing more than just chopping around inside that candle. Now, Friday was option expiration, so maybe that's why the market was just kind of hanging out roughly at these levels where we're at. Now, we look down here just a little bit and to the right, Notice where some of these high volume areas come into play. 642.71, down here at 633.53, and even down here at 622.42. Now, if we come over and look at the options market, right now we can see we are in negative gamma. And we come over and start looking at some of the gamma levels out there. To the upside, one of the areas I would want to watch, they're calling this a call resistance level right here at the 700 print. But draw your attention down here to the bottom left. You can see we have multiple strike prices with a lot of interest in it to the downside. Now, the strike price to the downside with the most amount of gamma exposure is going to be down here about 655. Now, if we go back over here and we look at where is 655 at, well, 655 would essentially still keep us roughly right within this range. We get close down towards the bottom, but that would not be enough to go ahead and push us over the edge. But one thing I do want to draw your attention to, notice the yellow line right here. That comes in at 662.50. When we get down below that price point, we can really start to see the market accelerate lower, and then maybe we'll start to see some gamma exposure even lower. So that level is going to be 662.50. Now, if we look at this chart, where is 662 at? Well, you can see it's not that far away from where we are currently at. So we'll see if indeed we can break a little bit lower. Now, on the 30-minute chart, you can see all these overlapping value areas. We just chop, 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 chop. We've come into the minus development area once, we rejected down. We came up into it a second time, we rejected down. And look at Friday's candle. We had a smaller range on Friday than what we saw on Thursday. And Friday was nothing more than an inside day. Notice the low, it was higher than the low on Thursday. Notice the high, it was also lower than the high than what we saw on Friday. So this all sets the stage that the market can be getting ready for another breakout or breakdown from this area. Now, we come over and look at the futures markets real quick. We can see all that up, down, up, down, up, down. Now, both of the ABC patterns that we are watching right down here and up here, they have been invalidated with that down move that we got on Thursday. And then on Friday, we've seen the market run back up. Now, notice value area low off of the weekly volume profile comes in about 66.57.5. The point of control is right above where price closed, 67.15.00, and value area high will be up here at 67.19. Now, in the event that we can get above value area high and we come back down, I wouldn't mind looking for a quick scalp towards the point of control. But then anything below that, I want to target some of these high volume areas, somewhere around 66.94. Then maybe down here to about 66.71, then value area low, and then back down here towards the candle bodies at about 65.95. Anything below that, we can look to target the wick of last week, 65.74, and then down here towards the candle body, about 65.54, and then all the way down beyond that low. Now, in the event that we end up breaking below this low, do we have any type of ABC pattern to the downside? Well, if I were to measure A to B equals C to D, we can see we have a price completion at about 64.93. However, let's go ahead and do a quick measurement to see, has the market retraced too far up? You can see we basically wicked that 786. So for me, that is going to be good enough. We can go ahead and look at that other price point, 64.93.59, as a potential target to the downside. But just note, if we start breaking below the swing lows, pay attention to the high volume areas. Right here, 65.29 would be an additional price point. And then even down lower, we have another untested point of control right down here at 6,400. Now, I want you guys to pay attention to 6,400 because as we come over here and we start looking at some of the option data real quick, and notice right down here, the green line, they're calling this put support, is exactly at 6,400. Is that any coincidence that the options market also has a lot of interest right where we had this point of control on the weekly time frame? Now, if we come over and we start looking at the daily profiles real quick, Friday, we had a pretty good push right off that low, rallied up, closed right near the highs of the session. Now, keep in mind, we do have a point of control from Thursday left behind, 67.30.00. Now, we notice if we can get above value area high from Friday, 67.15.25, I then want to look for the market to push towards that point of control. But in the event the market does something like this, either breaks value area high or gets all the way up here above the point of control, but then we start coming back down below value area high, I then want to target the point of control. I then want to pick off any of these high volume nodes on the profile and then value area low, and then look to see, can we come all the way back down and break the low that we saw on Friday and see if we can get the markets pushing substantially lower. Keep in mind, there's a lot of different levels that we have below us. And one of the areas we do want to pay attention to is going to be 67.10. Below 67.10, we are likely going to get more downside pressure in this market. Now, before we look at the Nasdaq, let's come over and take a look at gold. Gold has now had 9 consecutive up weeks in a row. And on Friday, I had a banger of a trade out there on gold. I want to go back and show you guys something real quick. How far do you guys think gold is going to be able to trace back? If we just go ahead and pull a Fibonacci retracement from the start of this move on the way up, notice the 38% retracement is going to be about 4,002. The 50% will be about 3879.6. 61.8 will be around 3757. Then the 786 will be about 3583. You might say, Mike, there is no way we're going to make it all the way back down to the 78.6% level or potentially lower. Well, during the live stream, we went back in time and said, when was the last time that gold has been up 9 consecutive weeks? And here you go. 1, 2, 3, 4, 5, 6, 7, 8, 9. And look on the 9th week. We have a wick on top of that candle, and look how far gold dropped back down. It almost undid the whole entire move. Gold violated the 786, almost did the 100% retracement of the entire move. Now, I'm not saying gold right now is going to retrace the whole entire move, but I'm just bringing that up to show you that it's possible. Now, if you guys don't want to miss the next time I go live, make sure you subscribe and you have the bell notifications turned on for all. Now, if we come over and look at the options data real quick, let's look at where some of the gamma exposure is. Right now, we are in positive gamma, but where that would actually flip would be if gold gets below 39.35. And look to the downside. Right down here, we basically have put support coming in somewhere in the ballpark of 3,800. So if we go back and look at our Fibonacci retracement, 3,800 would put us right between the 61.8 and 50% Fibonacci level. This would be a logical retracement level. And then from that point on, maybe gold just sets up another ABC pattern to the upside. Keep in mind also, the MACD indicator on the daily chart has never, ever in history been as high as it is right now. Now, we come over and look at the QQQs real quick. Start off on the weekly time frame. Now, this looks a little bit more bullish to me than the S&P, just slightly, right? A little bit less of a wick on top of the candle. The bottom of the candle on the weekly has a little bit larger of a wick, but it's still going to be an inside week. MACD indicator starting to have that roll effect. Looks like it could be getting ready to cross to the downside. And we have a couple high volume nodes. I most certainly want to pay attention to the downside, somewhere around 530. And then down here, right here, about 519-ish or so. Now, on the daily chart, what do we have going on? MACD indicator across the downside. And we're basically just contained within that big nasty down candle from 2 Fridays ago. Now on the 4-hour chart, MACD indicators went down by the 0 line, looking like it wants to firm up. But for right now, we're just in a little corrective pattern. You see higher highs, higher lows. Now, if we break below this trend line, watch out, that could spell trouble out here for the Nasdaq. Then we come over and look at the 30-minute chart. MACD indicator, still good separation of the 2 lines, showing no signs of worry at this point in time. So right now the Qs are in negative gamma, and look at one of the gamma exposure levels right down here. That would be down here at 590. So let's go back on the chart and look at where is 590 on this chart. On the daily chart, is it below this low? And you see 590 is just right around here. So it looks like if this level is going to get hit, we're going to come down here and tag it once again. And at that point, we'll see if the market is able to actually break and go lower. Now, when we come over and look at the Nasdaq futures, we see this big, ugly consolidation. However, we did close above value area high at 24,970.25. Now, the rule behind that is whenever we close outside of value within the next 1 to 2 sessions, we expect the market to come back and test that price point. So that means either this week or next week, since we're dealing with a weekly profile, 1 session equals 1 week in time. Now, if we get down below value area high, I want to target the point of control, but then I want to target right here, about 24,840. Below that, I can look down here at value area low. Then below that, we can look to see, can we come back down here towards these, between the candle bodies and the candle wicks. Below that, we're looking for the market to break all the way down through those lows. Keep in mind, we do have a couple untested point of controls below us, 24,073. And then even below that, 23,659. I know what you're thinking, Mike, we're never going to get down there. The market only goes up. and the market's getting ready to make a new all-time high. Well, it's funny, we actually have the Nasdaq futures actually in positive gamma, where the S&P futures and the SPY and the QQQs were all in negative gamma. Then if we look at where some of the gamma exposure is, 24,990, a big level up there. And to the downside, we want to watch all the way down here about 23,750. Now, 23,750. Well, if we were to make it down there, that would be enough to go ahead and take out this point of control right here. It would not quite be enough to make it down towards this secondary point of control. However, now when we come over and look at the daily profiles, keep in mind, we still have an untested point of control from Thursday, 25,068. Highly probable we're going to hit that level, but notice on the daily time frame, we also were able to close above value area high, which implies that either Monday or Tuesday, we are going to come back and hit value area high at 24,954.50. Now, in the event we break that price point, I do not want to use the point of control as target number one. It's too close to value area low. Instead, I want to target this high volume node at about 24,912. Below that, we can look to maybe target this minus development area, 24,806, then the point of control, value area low, and then see, can we make a run and take out the lows from Friday? Now, if you guys would like to learn how to get these volume profiles for free using NinjaTrader Prop, then you want to make sure to check out this next video right here.